Hello friends. So a few days back, I made a video regarding the market direction, and I introduced you to a metric percentage of companies above 200-day moving average and all. But given we have gone through almost 7 months of correction, and last 2 months the correction have been, little high impacting, I thought to make another video on, where are the markets, both from a short-term perspective and from a long-term perspective. So let's go through it. So first question, where is Nifty? And we'll keep this discussion around Nifty. And to do this analysis, let us understand a little bit of history. So what we have done is we have taken the Nifty data from right 2007 peak. And why I have done that? So basically, if you see the market peaked out in 2007 after a big bull run, and currently also it looks like market has peaked out. So I've tried to take one peak to peak cycle across more than a decade so that you get 15-16 years of good view from a peak to peak cycle to understand how much money was made between two peak cycle. If I take a peak cycle to a bottom cycle, the returns will look very low. If I take from a bottom cycle to peak cycle, the returns will look very high. And not everybody is able to make an exit as at the perfect peak. People realize only after a few 3-4 months. So I felt this is a reasonable period to take just to understand how Nifty has done. If you want to go longer in the history, you can do the analysis, share it, and it'll be good to go through. But this is what I have taken. And the cumulative return of Nifty in this period has been almost 2.5x with a 8.99% CAGR from this time period to this time period. Also, what is important is, so one, this CAGR is not that great, even if you stayed for 16 years, given you invested at a peak of a market. The other thing is, if you look at the current return, the 3-month return has been -9%, 6-month return has been -12.5%, year till date -9%. So this year we have not made money, and 1-year return has been less than this overall average. So now on a year basis, we are slightly underperforming at almost 8% CAGR, though the 3-year, 5-year, 10-year CAGR is around 10 to 12%. Also, what surprised me, currently the correction has not been a big correction, like at least at Nifty level. Small cap, we know the index is corrected 15%. But Nifty level, I felt the correction was not big. But when I looked at the history of Nifty, looks like in terms of price correction, this is the 5th worst correction. That means from any peak, we have not seen a 15% correction for more than 4 times. So the worst correction was 2008 recession correction, where Nifty corrected 60%, and it took almost 3 years, 2.5 to 3 years to cross that 2007 high. The second worst correction was -38% correction, which happened during COVID period. But this correction was very short-lived because Nifty covered this data in less than 1-year period within 299 days. The third worst correction was -28% correction. So this correction in terms of value correction was much lower than 2020. But in terms of time correction, this was 3 times more painful than 2020, because this was the longest correction. Even the 2008 correction, though in terms of price, it was a very long one. Time also, it was a longer one, but given it took 1035 days for Nifty to cross 60% return, here just to cross 28% return between 2011 to 13, it took 1087 days. So this was like a very frustrating correction. And then we had a 2015 to 17 correction, where we have 22% correction. And start and end is the period when the drawdown starting point and drawdown end point, and valley is basically that point where you got the max possible drawdown. And if you look at the current correction, it started on 19th of October, and the valley has been made on 13th of May, where we had almost -14.5% correction, and this is where we stand today. So if Nifty has to cross and make this zero, which means end, Nifty has to go 14% up. Whether it will go in next 2 months, 3 months, 1 year, 2 years is anybody's guess. So this gives some flavor of how to look at the Nifty correction. And same, if you look in terms of the Nifty chart, this was the -60% correction, and this was the -38% correction, which you saw here. And then 2010 and 2015 corrections are this one. This is the 2010 correction and this is the 2015 correction. And currently we are in the middle of the current drawdown. And the same thing if you see in terms of drawdown percentage. So this was the 2008 correction, then this was the 2011 correction, and this was the 2015 correction, this was the 2020, and this is the current ongoing. So if you look at the mean average of all the drawdowns, currently we have almost gone more than the mean average drawdown. So it's not a small correction, it's not a very big correction, it just says that we are somewhere near the average fair amount of correction. So I am discussing all this, and I really like this stand-up comedy on YouTube. And there was a sentence, मेरी कल की चिंता नहीं है मेरे पास, उतनी preparation है मेरे पास, मेरी फटी पड़ी है परसों को लेके. Now what do I mean by this is, I'm not very worried about the price correction, because you can see the worst price correction अभी 15% हो गया है, और कितना हो सकता है. My hunches, these kind of 60 and 40% correction you don't get every second year. These are decadal correction, they will happen. But the next big corrections, I feel these could be the bigger corrections. So we have done 15%, we might do 15, 20, 22, worst case around 25%. So even from this level, I don't see a possibility of why we should correct more than 10% from here. So that is not what worries me. What worries me is what if we get this kind of correction of 741 days or 1087 days, which means there's an opportunity cost to be paid, because if we put that money in FD, we might be able to generate 5%, 6%, 7% return, versus here where we'll go in negative. So if it stays for next 2-3 years, we will go into almost a 20% opportunity loss that way. So my worry is more on the time correction than the price correction, because price correction, I don't see a possibility of more than 10%. And again, if you go through the old video, there also I have told that the worst I see from here at a Nifty level. See, small cap is very different. We need to tackle and handle and discuss small cap differently. I am right now discussing only on Nifty, and this is valid only for Nifty. So I've said more than 10% correction, I don't even think fundamentally possible because of reasons highlighted, until we see some kind of global crisis and all the demand revenue number go haywire. So price correction and time correction, they're two different things, and we need to handle them separately. And we always think about price correction, we don't think much about time correction because that is never discussed. Hence I wanted to just raise this point. And I'm still checking with my friends and all, everybody, it looks like the SIPs are still on, but my feel is it is not the price correction which frustrates, it is the time correction which frustrates. And when you see these kind of time bands, see this to this, it took Nifty so much of time to cross, here to here so much of time to cross. So last two correction, even if you see after 2018, in last 4-5 years, we have not seen any big time correction. And if it happens for the first time, a lot of new investors will be tested. Those who were small cap investors, they would have still felt it between 2018 to 22. But any Nifty kind of investor, large cap investor, he may not have felt the pain. And if it happens, it might happen for the first time. And if we see in terms of volatility, so this is the Nifty chart, this is the drawdown, and this is that kind of daily return. Look at the kind of volatility we had in 2008, or we had in 2009, or we had in 2020. We are not seeing this kind of volatility right now. So this is more, I mean, if this market becomes worst, it could become a 2011 to 13 kind of market. If this market remains little better, it might be a 2015-16 kind of market. But that is where we are, and time will tell what kind of market it is. One more thing, because this last 1 month has been highly little frustrating, and one side people feel that 15% correction is nothing because people have seen so much of money making. But last 1 month on Twitter and WhatsApp groups, the typical messages are flowing which says the market moved. So if we look at this month correction in May, Nifty has corrected minus 7.37%. And if we look in terms of monthly correction, out of 177 months since 2007, this is the 9th worst month in terms of a monthly correction, which highlights some level of spookiness in the market, because this month has been almost like this like the top 10 percentile of the worst possible corrections. Also, now let's look at little bit of fundamentals, because results are coming and we will have the FY22 full results available. But right now, out of 50 companies, we have results declared for 33 companies, and the results are not that bad. You can say that, okay, there is a commodity cycle which will top out. So we can say there is a banking credit cycle, which where banks have not performed. So keeping all that aside, taking at a generic level, so far, the results have been decent at 15% top line growth and 18% EBIT growth. And the total profit of these 33 companies is almost 4 lakh crore. And total market cap at which they trade today is almost like 100 lakh crore, which means at least for the companies where we have the results available, that trading at 25x valuation, which is, not undervalued for sure. And given if the inflation is there, if interest rate rises, the typical DCF in a rising interest rate companies correct valuation. So we should not be surprised to see some correction. And again, if we take a 10% correction in, let's say, next 6 months, and let's say same kind of performance is there, instead of 19%, 20% because of inflation, let's say if growth slows down to 10%. So basically your EPS grows by 10% or your valuation falls further by 10%. So if we combine the EPS growth and 10% price correction, again, somewhere we'll reach around this, 20x. So I don't see why we should not, why we should bounce back all of a sudden. But I don't see any kind of very big panic or fear beyond a 10% kind of correction, which may happen over a 6-7 month period of time. Also, this is like a set of randomly chosen 200 stocks out of top 500. And what we see is still 60% of the companies are above 20p, which again says markets are not so cheap. It might be somewhere between fair value correction to little on the higher side, but nowhere they're cheap. Until the future is really good, the earnings are really good. If we get this kind of 20% kind of earnings, it can surprise. We might see the bottom, but we live on probability. So I will not overrule chances of further 10% correction or a time correction. Those are the possibilities. And hence I feel this is still a market to add in a staggered level rather than I feel going 100% invested. If we see a little bit of technicals where we are, so in terms of technical, the gray, this is a monthly chart. And in this monthly chart, the gray line is your 13-month moving average and the blue line is your 20-month moving average. And if you see in a strong bull market, in major corrections, the market gets support around this gray line and a monthly chart. And in major correction of the market, it gets support somewhere around either the blue line or black line, which is a, which is a 40-month moving average. And many times when the index goes through heavy time correction, your blue, black, gray, the lines, they will start, coming closer to each other. And that there, somewhere in the black line, you will find support. You can see it's happening here, here, here. Right now, if you see, we have gone through a bull run and there is a strong gap between, these two lines. And currently we are near the blue line. I don't know if the stock will take support here. There is another thing which we need to look at, and let me just again explain through the charts. So if you look at a short-term view, which is more a daily chart, and I will come to daily chart, we are at a critical juncture. If you can see, this is a this has been a support level, and we are again here. And today market did a bounce back. And if you see last year, this was the level where Nifty spent quite good amount of time. So this looks like a decent support level on a daily level and even on a monthly level. I don't know if this will sustain or will break, but the idea is always to play with risk reward rather than prediction. So I'm just highlighting more from a short-term perspective, long-term perspective, how one needs to plan. It's up to you. But the long-term view is like, are the odds in favor? So one thing I would like to highlight, let's say, if you invested somewhere between 2007 to 2022, how many times Nifty has ended up giving positive return and how many times negative return? So out of all these years, only 1, 2, 3 years, Nifty has given negative return, like out of almost, 14 years, 7, 8, 9, 10, and yeah, 15 years. This is the 16th year and this is negative. So if this year we turn negative out of 16 years, this will be fourth year when Nifty will give negative return. So if we see in terms of days, it's like a random probability of 53% to make a positive return because you get positive. But if you are invested for a month, like you buy on first, sell on third, still your probability doesn't increase. Still you have only 56% probability to make a positive return. But if you are invested for a quarter, like you buy in Jan and you sell in March and you buy in Feb, sell in April end, your chances of making positive returns increases with 63%. And if you stay invested for the whole year, then there are 75% chances that from that point of time, you will end up making some positive return, which means the long term, it is always favorable. So combine the technical criteria, combine this fundamental knowledge of long-term investing, combine with the drawdown analysis, the time analysis. Think of what do you think of probabilities to be in your favor if you are investing from here, either through a price correction or a time correction. But what I do keep in mind is, first thing, don't buy at the tops. So first thing first is where we should not lose money. And buying a top for me could be multiple things. For somebody with a chart, it could be chart forming a top. For somebody, for the fundamental view, it could be when your returns are more than double. Like you saw, the mean return is somewhere between 8 to 11%. So if you see you are making 22, 23%, 20% return on Nifty in not 2-year CAGR basis, I think that becomes time to become a little bit cautious. Of course, you need to look at the valuation, fundamental, everything. Third, don't buy the excitement. Last year, we know what was the kind of excitement. Buy the lows. So buy whenever you see some kind of lows getting created, either on technically on the chart or these kind of worst case drawdown analysis. Buy the pessimism, buy in staggered quantity, because now you know that price correction is a different thing and time correction is a different thing. So even if the price has corrected 15% and you like it, it may not be, but you also see that valuation wise, we saw still it is 25p. So what if there is a time correction? So at least what I like to do, and again, this is not any kind of advisory, all this I am suggesting is what has worked for me from a long-term investing perspective. So if we have to buy, a staggered buy always makes sense until the valuations become mouth-watering, where you can see 80% of the companies has gone below 20p. The Nifty 33, whatever we saw, that is below 20p and all. And or we are we have very high conviction about next 12 months that how earnings is going to surprise and break all the records. Which is not the case again, because the inflation is on rise. Everybody tries to predict that the inflation will come down, come up. I wonder if people have the right answer. And why, if the charts are supportive, why when the valuations are supportive? So the idea is to take these factors, try to build your own system, whether it is fundamental, whether it's technical, whether it is quants. And still, if you take all these factors into consideration, I believe one will be able to avoid the euphoric times where the chances of making negative return is high, and still should be able to generate a decent return which is better than the average mean return. Now the short-term view. So last time I spoke about a very important metric called percentage of companies above and below 200-day moving average, and if you've not seen the video, it's there in the description. Now from a short-term perspective, I'll talk about a metric called percentage of companies above and below 20-day moving average. So you see this chart is for last 2 years of chart. And the pink line which you see is the percentage of companies which are below 20-day moving average. So when more and more companies go below 20-day moving average, in turn, it means that in short term, the market, most of the stocks are falling down. Now, what I have done is I have tried to pick some few points of this pink line which created its peak. Like this was done on Jan 29th. This was done on March 25th. 2021. This was done on August 23rd, 2021. This was in December 2021. This was in February 24, 2022. And this chart was done somewhere in the end of April. Now, why I'm highlighting these points, when you go to the daily chart, now those are the month and points here: Jan 29th, March 25th, 2021, August 23rd, 2021, December 20th, 2021, and Feb 24th, 2022. You will see wherever this thing peaks out, that is where even your index, which is a small cap index, because we are taking almost 500. This is done for top 500 stocks, so more of a broader market. And these are the places where mostly your small cap index in a short term also it has bottomed. So when this number peaks out, the index bottoms out. And it's not like predicting, it's like waiting. And if you see a little bit of reversal happening, you still get a good 1 week to go and add. So I just want to highlight. But if you look at a daily chart, we are in a downtrend. You can see there is a double top formation. It has created lower highs, lower lows. We need to and again, now if you see this chart, I think we just broke this down. So what I am telling is maybe short-term bottom would have been created. And why I'm telling is, if we look at this chart, so I'm again showing you this chart as of now today on 16th. So when I showed you this chart here, we were at 65% companies below 20-day moving average. As of now today on Friday, 98% companies went below 20-day moving average. And now this number has fallen from 98 to maybe 92%. So I don't know if we have met the short-term bottom or not, but time will tell. But I expect some kind of short-term bottom to be created, which means if things go fine, again, the small cap index might run up 4, 5, 6, 7, 10% from here. But for a long-term perspective, we need to see if again we are back to creating higher highs, higher lows, or at least we don't create lower highs, lower lows, we become range bound. And then of course, depending on the fundamental attractiveness, the EPS growth, the time correction, we will see where the market goes. So this is how I try to blend quants. I try to blend fundamental, technical, just to get more understanding of where we are going, and to be directionally right than being totally wrong at the extreme. And of course, if one builds a system where one can take all these parameters together, create some kind of mathematical probabilistic model, he might have a better answer to deal with it in terms of probabilities. So I hope you liked the video, and if you liked the video, do like it, do subscribe to our channel if you have not subscribed, and do press the bell icon to receive the updates. And I will see you with another analysis soon. Thank you.
Want to be a do-it-yourself investor or trader? Are you interested in data-driven concepts and strategies for wealth creation, leveraging, fundamental, or technical analysis? Learn business, financial, management, valuation and fraud analysis for wealth creation. Learn chart analysis, price volume action, technical indicators and risk management for both trading and investing. Learn systematic investing and trading with full automation using algorithms from scratch. 120 hours of recorded video content across 8 courses, 4 learning tracks, and 2 memberships. You also get a lot of screeners, checklists, dashboards and tools for efficient analysis. So far, we have covered 25 plus companies, 5 plus sectors, 300 plus charts, 4 unique trading and investing strategies, and we keep adding minimum 5 to 6 hours of relevant content every month. As part of practitioner membership, you get to attend regular webinars and meetups, and also access to our newsletters on markets across range of topics. We cover fundamentals, technical, quants, and techno-funda skills through various courses, bundles and learning tracks available through annual and lifetime memberships. Learn from credible minds with rich experience in finance, stock markets, and data science. Explore our courses, learning tracks, and memberships on our app Scientific Investing and our website learn.scientificinvesting.in for more information. For any queries, write to info@theratescientificinvesting.in.